So we're looking at silver on the 1 hour chart. Now this uh, has broken out of this resistance all the way from $71. This was the resistance trend line, which it finally broke out. And I had given this alert yesterday on my Twitter or X account. So now, what are the targets if it breakout plays and what are the invalidation levels? So this zone that I have highlighted on the rectangle, this is the most important support zone or demand zone. As long as it holds, silver can go and test higher zones. 57.5 to $56 region. So 57.5 to 56 is the most important demand zone or support zone. Any good dip into that zone can be a buy the dip zone with invalidation very clear that if it loses this low, which is at around $56. So if it loses this low of $56 or 55.9, and if price starts trading below it, then this breakout would be a fake out. As long as it is holding this $56 region, I think it is a good opportunity to look for longs or buy the dip, as this is more likely to trade and test higher levels. So if you are already in a long, you can move your stop loss to break even. If you're looking to enter, the first good zone would be if there is a dip at 57, $58 or even 56.5, then that would be a good buy the dip zone. And given the uncertainty currently and the oil prices pumping, there can be an opportunity. But or else the second entry can be at the bounce of this support or breakout from this downtrend. You can make a case of this downtrend also, which is currently acting as resistance. And if it breaks out of this, starts trading, then that can be your long trigger. Or if it comes down and retests this zone, then that can be your long trigger. Because it is currently at resistance. So this zone is not where I would be comfortable in taking new longs. So either buy the dip or buy the breakout. How high can it go? If it continues to play this breakout trade, then the next important level will be at around $63, $64 region, $66 region, and in a complete flush of all the shots, it can also go and retest 70 to $71. So the next chart we are looking at is AAVE. Now we're looking at AAVE on the daily chart, and it is showing some strength. And as long as this low, recent low holds on daily, which is at around $87. So let's round it up to 85. As long as this low holds between 85 to $87, it is more likely to go and test higher zones. It is showing strength. So the first zone would be at around 129 to 130. And if we see good bullish momentum overall in the crypto market, then it can also go and retest this zone at around 180. So I see a good risk to reward ratio in AAVE. If you have not entered, I think this is a good spot back to trade because the risk is of almost $10 or 10%, and the reward is 30% and almost 80-90%. So good risk to reward ratio. This invalidation is clear acceptance below $85 region. If price starts trading below 85 and you see that the market has accepted this price, then it is most likely to go lower. As long as market is holding this as support zone, it is more likely to go higher and test these two resistances. So you want a trading crypto futures with a safety net, then don't get worried because MEXC's future trading protection program has your back. Let's dive into futures trading with built-in loss coverage so you can catch trends with less stress. What you love is that there is first trade protection where you get 100 USD worth of covered in your initial trade. There is liquidation and loss coverage up to 2000 US dollars in liquidation perks to help you bounce back. And also there is zero fee perks. So you trade smoothly on one of the fastest, lowest fee crypto exchanges around the world. So don't let the market volatility hold back. Test your strategy with a safety cushion. Claim your protection and start trading today. Use this link which I have provided in the description and join me.